Hey, Jim. I'm a first year resident heading into anesthesia who used the pandemic to learn about and begin investing. Since I'm relatively new to the market, I was wondering if you could speak a bit to the general market trends during election seasons. I know past outcomes don't indicate future returns, but I assume there's a general sway in the market during elections and afterwards. What usually happens if a Republican president were to win a second term? At the same time, what usually happens if a Republican president were to lose to a Democrat? And if the office were to change hands, what's the usual market trend during the lame duck period and also just after a new president takes office? I'm just trying to prepare for what's to come. Thanks for all that you do.
Okay, let's get political, or at least talk about market trends during election seasons. And what happens if Republican presidents and Democrats win? Well, it turns out that Google is your friend on this topic. Lots of people have looked into this. There's a particularly good article by Kristen McKenna at Forbes that got into a lot of interesting statistics on this topic. Like most investing articles, it warns you to watch out for increased volatility. Okay, well, that's certainly fine. And also warns you to beware of bold predictions, reminding you that most people did not think President Trump was going to win the 2016 election. It's interesting that not only can elections affect markets, but markets can affect elections. In this article, they talk about how the S&P 500 has been a great indicator of presidential elections 3 months out. It turns out if the market is down, the incumbent is much less likely to win. And so you can see maybe why the president is so focused on market returns this year. But if you look at, how markets actually do after an election, you can see that in the election year, when a new president is elected, stocks have a return of, on average, 9.3%. And in all presidential election years, that's 11.3%. And if an incumbent president wins, it's 13.4%. So when the incumbent wins, the market has actually had a higher return that year. Now, whether that's cause or effect is hard to say, right? Because the election tends to be toward the end of the year. So maybe it's more interesting to take a look at the year after the election, because stocks historically have performed better during election years than the year after, at least for domestic stocks. It's actually just the opposite for international stocks. So if you're really trying to time the market, and I recommend you don't, you would be swapping at the end of the year from U.S. stocks to international stocks. But at any rate, you got to keep that in mind. So they also looked into some other things, such as the returns when the Democrats, Republicans, or a mix of both have control of the House and Senate. The highest returning partisan control combination for the S&P 500 since 1933 has been a Democratic Senate, a Republican House, and a Democratic president. So good luck getting that this year. I don't think that's predicted by anybody to happen. But returns average 13.6% per year under that combination. Our current mix of a Republican Senate, Democratic House, and Republican president averages a 10.8% return. Interestingly, the combination here that a lot of people are thinking we're going to have, which is a Biden victory, Republican Senate and Democratic House, that combination apparently hasn't been seen since 1886. So we don't really have any data to correlate with that. But at any rate, the truth is, whoever's elected president, 4 to 8 years from now, they're not going to be president. And your investing plan needs to last for the next 10, 20, 30, maybe even 60 years if you're young. This is just a blip along the way. So don't make any huge changes to your investing plan based on how the election's going, what's in the political news, even what's in the economic news. Set a plan, follow your plan. It's far more important that you follow a good plan than what exact good plan you choose to follow. So keep that in mind. And don't put too much faith into this past data. It's all retrospective, and you can't, look at it going forward and expect it to be predictive of what's going to happen in the future. The market doesn't care what happened in the past. And this isn't physics, right? It's economics, and ongoing events affect the data that we have to use to study. And so it's really something you got to be a little bit careful about, changing your investment plan based on what happened in election years in the past. Not something I would do. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.